Hi and welcome. You may have stumbled on this video because you want to know the difference between a Roth IRA and a traditional IRA. Or maybe you're thinking, Austin, I just have no idea where to start. After all, this is a complex issue that people really aren't teaching anymore, and I'm going to do my best to explain the differences and make it as easy as possible to understand. Then at the end, I'm going to break it down, show you the numbers, and show you what's the best option for you. Believe it or not, this is a big decision and it could be the difference between hundreds of thousands of dollars when it comes time to retire. So just stick around and you might end up even learning something. My name is Austin and I have a degree in finance. So let's first start by talking about the Roth IRA. The Roth IRA is a newer tool created in 1997. The Roth Individual Retirement Account offers tax-free growth and tax-free withdrawals at retirement. Once you hit the age of 59 and a half, you can take your retirement savings and enjoy the fruits of your labor. So let's talk about pros and cons of a Roth IRA. Number one, the biggest advantage of a Roth IRA is all the money that you put into your Roth, you will be able to take out tax-free when it's time to retire. So this means that you don't have to pay any taxes on your earnings or withdrawals, which is by far the biggest benefit. Number two, another great benefit is the ability to withdraw your contributions at any time. But yes, I said contributions and not profit. So let's say you put $5,000 into your Roth and it grows to $7,000. You are only allowed to take out that $5,000 without any penalties because it is considered your contribution to your account. If you were to take out that $7,000 early, it would be subject to penalties. And that brings us to the cons of the Roth IRA. First off, taxes are paid before you put money into the account, meaning only post-tax income can be invested into the Roth, which at the end of the day, this just means you're going to have less money to invest up front. Now, there is a limit to how much you can contribute to a Roth. The amount is determined by how much money you make. But if you make less than $138,000 a year, you can contribute a maximum of $6,000 a year or $7,000 a year if you're over the age of 50. I know a majority of people make less than $138,000, so this video is tailored to those individuals. Roth IRAs, though, are not immune to penalties. There is a 10% penalty for taking out profits early, and on top of that, the IRS will still tax you on that money as well. So avoid taking profits out early, as this is basically just money wasted. So next, we're going to move on to the traditional 401k. The traditional 401k was created in 1974 and is known as a tax-deferred program. Number one, the biggest difference between a Roth is when the taxes are paid for. For traditional 401k, you contribute your money tax-free. This means that everything you put into the IRA is pre-tax. So before you pay any taxes, that's when you put your money into the IRA. The big difference here is when it's time to take the money out, that is when you're taxed on your retirement money. Number two, the contribution limits do change quite often, but in 2023, you can put up to $22,500 into your 401k, and if you're over the age of 50, then you can put up to $30,000, which is almost 4 times higher than what you can put into your Roth IRA. Number three, this is a big one. Most of the time when you hear about employer matches, it's related to traditional 401k accounts. If your employer says they're going to match 2% of what you can contribute, it is a great idea to contribute the same amount. Basically, what I'm saying is you should take that match. It's free money, it's free income, it's going to be the best return on investment that you can make. So moving on to cons of the traditional 401k. So one of the biggest cons to traditional 401k is the tax bill that comes when it's time to retire. As you take your distributions, the money is taxed at the current tax rate. And if you have hundreds of thousands of dollars in there, I'm sure you can see how this can add up quite quickly. Again, like the Roth IRA, there is a penalty for withdrawing early. This really defeats the whole purpose of a retirement account, so this really shouldn't be a con, but it's worth mentioning for your knowledge. This account does have an age limit too, though. Once you hit the age of 73, you are required to start taking your money out. This is called the required minimum distributions, and this is just a minimum amount of money that you must start taking out once you hit that age. So it's the money that you have to pay yourself at 73. So who best fits the needs for a Roth retirement account and who best fits the needs for a traditional 401k account? Both accounts, you can start withdrawing your retirement money penalty-free once you hit the magical age of 59 and a half. Why 59 and a half? I'm not sure. But anyway, the Roth is going to be your best bet for middle or lower income. Since you have to pay taxes when your income is lower, it will result in more money in your retirement account as it grows tax-free. The Roth is going to be worse for high income earners. There are income limits, so high income individuals just simply won't be able to contribute if they are above the limits. A traditional 401k is going to benefit those high income earners. Also, it will benefit people who are rich right now, but plan on being poor when it comes to retire. Just kidding. Yes, there are some other benefits, but I just want to keep it simple and keep to the main points. Hello, sorry to interrupt, but I want to break down these numbers for you to show you how much benefit that the Roth has over the traditional IRA accounts. So hopping into Excel right here, we're going to have the Roth IRA account on the top and the traditional here down on the bottom. we're going to have a yearly contribution of $6,000, even though the maximum is $6,500. I just chose $6,000. And then we're going to have a tax rate of 22%. So the way the Roth works is you're going to have to pay those taxes. But on the traditional account, you get to put your money in first, tax-free. But we're still going to contribute $6,000. So you do get a little bit of tax savings with the traditional, and I'll cover that here at the end. But we're going to contribute to the account for 40 years. And that 40 years is going to put us at the age of 65, assuming we're 25 right now. But these principles stay the same. So whether you're 25 years old or 35 years old, it still is the same principles here. So your expected rate of return is going to be 8%. Okay, 8% is a pretty standard number. It's nothing special. It's nothing incredible. It's conservative. And then our tax rate at retirement. The Roth is going to be tax-free. That's the big tool about the Roth, is you're going to pull everything out without paying taxes. While the traditional, you're going to have to pay 20% taxes. And I just chose 20% because it's an arbitrary number that's relatively close to what might be in real life. So our balance and what we're going to retire with in the Roth account is going to be $1.6 million, whereas in the traditional IRA account is going to be roughly $1.3 million, which gives us a Roth IRA savings of $324,000. That is an incredible amount, and that just shows you the power and the sheer just benefits that the Roth gives you over a traditional account. Now, I know what you might be thinking is, with all that money that you've saved in the traditional account, what if you just invested it? Okay, I have you covered. If you just invested the tax savings from the Roth IRA account into a traditional IRA account, you're going to still have a deficit, meaning you're going to still make more in the Roth account by almost $100,000, still making the Roth the best benefit. So these are just my thoughts and my opinions, but I'm going to be speaking for those who I think are most my audiences. And it's particularly those individuals making less than $150,000 a year. If people are making less than $150,000 a year, then I think the Roth is going to be the best option for you. It's also entirely possible to contribute to both accounts. These accounts are stackable. Hopefully I've done an okay job of showing you the sheer tax benefits of a Roth account and being able to withdraw all of your money tax-free. So if you're a high net worth individual and you have a high income, then the 401k will probably be your best option. But it's important to remember that this is a decision that is very important for your financial future, and I just want to do my best to help make sure that you make the right decision.
A quick disclaimer here. I am no licensed professional, and I know it's important to talk to a licensed professional about these issues. These issues are daunting, and it's important to do as much research as possible and get more opinions than just one. But I do also recognize it is not available for everyone to purchase a licensed professional or hire one out, because it can be a very expensive purchase. So do your due diligence and do some more research.
Now, to wrap it up, if you found this video helpful, can you please do me a favor and like the video, and please help it get to more and more people. And if you're interested in the stock market, please use my link below for Webull. You get some free stocks, and subscribe to the channel for more finance related content. I'm Austin. We'll see ya.